Nick Waddy, currency strategist with Barclays Capital, joins us live from Singapore now. Nick, good morning. Thank you for joining us. Nick, the story in India is that bond yields have corrected, rupee has stabilized. What are you advising your clients?
Well, bond yields have indeed rallied, although we are still some way above where we were a couple of weeks ago. I'd say that the impact on the currency is a little less clear than on bonds. These measures last night are certainly geared towards addressing or reversing indeed some of the liquidity tightening measures that were employed by the RBI a couple of weeks ago. So that is welcome. But I think a lot of the damage, at least in terms of credibility, has been done. And I think the reason why the currency isn't rallying by as much as, say, the bond market is simply because there's really been nothing that would to increase inflows on the portfolio side into India. So I'd say until we get something on the portfolio inflow front, the rupee will struggle to rally materially.
Jayesh Mehta as well joins in on the show. Jayesh, hi, morning. 63.39 now on the currency. Does it seem like it is going to stabilize and perhaps strengthen from these levels, or do you think this is just a near-term knee-jerk reaction because of what the RBI did overnight?
No, I think definitely rupee is now going to track the equity markets. I think one of our thing is on the CAD. We were funding our CAD through equity flows, and I think this monetary tightening measure did impact the equity market to a greater extent. And if we see some revival in equity, and of course, as FM said yesterday, if some Hindustan Zinc or Balco sales happens through and some flows comes in, that's when rupee will react more positively. But I think having said that, I think this is all, the good part is it's all squashed all the rumors of, like, if the RBI withdraws the measure and it will fly off and stuff like that. It has definitely squashed all that rumors.
Yash, do you think the recent communication from central bank is confusing markets, or last evening's communication is more like a sigh of relief, and now markets are finally celebrating that whatever harm Reserve Bank of India had done 15 days ago, they are simply trying to reverse it? So do you think last evening's communication is sign of confusion, or that is sign of an acknowledgement that we've done a wrong move, now we're trying to fix it?
I think, you see, when these moves were announced, we had both the finance minister and prime minister talking on national television that the intention is to tighten the short-term money market yields and not to impact the long-term yields. The reality is the collateral effect did happen because of the supply being there every week of 15,000 crores of long-dated bonds, and plus you had state loans every week, almost except for 1 week, you had almost state loans every week. So I think with that supply and money market being tight, something had to be done on the long-term bond yields, which was just in a free fall. Like the market, if you really looked at last 2 days, was completely dysfunctional market. And I think RBI did a good thing. The only hope was like if they could have done it a little earlier. But nevertheless, at least they have made sure that money market yield to stabilize currency or not, they may keep tighter for whatever period they feel comfortable. But at least long-term yields will not get affected, and that's taken very positively by both bond market as well as equity markets, because you had huge mark-to-market losses sitting on the entire banking system and without any macro changes.
Nick, the fall in rupee has been very sharp and very hard, and Indian currency has got compressed by about 3-4% in a matter of just 3 trading sessions. Do you think in the short term, Indian rupee is oversold and it really could stage a strong and a technical recovery?
I mean, I think it will continue to come under pressure, actually. I don't think we need to look at the drivers of weakness in recent days and weeks. Partly it is due to liquidity tightening measures that we saw a couple of days ago. But the other reason for rupee weakness really relates to the fact that US Treasury yields have been heading higher. So the kind of losses that you just mentioned on the rupee in recent trading sessions, we're also seeing in the likes of the Brazilian real and the Mexican peso. So this is a big international factor that shouldn't be ignored. We do get the FOMC minutes tonight, which should give both interest rate markets and foreign exchange markets a guide in the coming weeks. We ultimately think that the Fed will taper in September. That isn't really a positive prospect for those economies and currencies that offer carry, such as the Indian rupee or the Indonesian rupiah, for that matter. So I think, while we can feel a little enthused by the RBI's U-turn last night, I think that the ongoing headwinds from higher US yields will really limit the extent to which the rupee will rally materially in the coming weeks.
Nick, Jayesh, gentlemen, really appreciate you taking the time out and speaking with us and getting us more clarity on which way the currency might head and what really is the situation like right now.